economic growth, strong corporate profits, and a market which we think is underpriced at the start of the year. The forecast is that by year-end, the S&P 500 could be at about 1,450.
I was actually trying to decide between that video and one of a kid at a high school concert doing a drum solo who, at the end of the solo, throws up. I don't know which one was the better choice. I'll mention, too, that Abby's prediction of 1450 was from last year. So also kind of funny that that was the crazy number that I mentioned, I think a day or two ago. I hope I'm wrong. Boy, I hope I'm dead wrong on that. So first thing I want to mention is the interesting way the market's reacting to bad news. Yesterday, we had a situation on the NQ where where Microsoft came out with a bit of a warning, and we had this boom spike down, and the market said, "Oh, who cares?" and it went up. And then today, in the midst of the trading day, the Intel came out and said, their revenues would have a bit of a shortfall, and took a quick tumble then too. But it's funny. Back in, I think it was 2007, the first sign that there was trouble was, I think, a Google earnings miss in July 2007, and that's when things would gap down hard the next day. It's a little concerning to me, Mr. Permabear, that bad news is being sort of shaken off so easily. Little bothersome. So the big question right now, and this sort of goes to my make or break post from, I guess, early this morning, is: are we going to have a rollover or breakout? And if we look at an example here on the S&P, let's think back to what was going on here. Now here we have not only a lovely inverted head and shoulders pattern, but breaking out into, for all intents and purposes, uncharted territory. Yes, years and years ago the S&P was higher than this, but kind of ancient history. This was sort of like breakout to a new high. And this is when people like me were like, okay, forget it. We're all doomed. I mean, the market's just never going to stop going higher. Because if you look down here at this pattern, this was the exact same kind of pattern that launched this completely agonizing bull run. And so here's a smaller version. And so, who would argue that it was going to do anything would go up? And it sort of eased back, and then got real shaky breaky here. And now we can see that this was, here it looked nothing but bullish. It looked fantastic for the bulls, and that was the best time in years to short. Market loves playing cute little jokes like that on us, and we got kind of a second chance here in July, and then the real fun started. And of course, the real fun only lasted really 6 or 7 trading days. I mean, that's the thing with trading a market like this, which has got so much uplift. When breaks happen, and the rare times they happen, it's all over in a week or so. I mean, it's so this is the proverbial wall of worry that takes months and months and months. And I don't know if slope of hope is the right term. It's more like the abandoned well of hope. You just kind of jump in and plunge. So that's where we're at right now, because we have a kind of decently formed inverted head and shoulders, not award-winning, but it's okay, right here. And yesterday it started to push above this line, and today it just kind of farted around, and we ended up 0.03%. So everybody's falling asleep at the wheel. I was really wondering what I was going to talk about in this video, because this is the point of indecision. And this is the line that really divides that. So you got me. The Thursday and Friday will say a lot, I think, about where we're heading. if we fart around and get squishy next day or two, that's probably pretty good for us. If we kind of resolutely push past 1300, getting up to 1330 is kind of a given, it seems to me. Then we can face another decision point. Won't that be fun? And I guess it goes without saying that everyone's just like mellow yellow right now. If you look at the VIX, we're down, almost into the teens. And over the past couple of years, we're really in the lower reaches of what we've seen in all this time. So, lots of fun and excitement here, lots of fun and excitement here, and all over way too quickly. What a shame, what a shame. So, let me this won't be a very long video, and go do other things with your life, because this market's kind of like watching the grass grow. So the NASDAQ Composite's definitely one of the cleaner breakouts. You can see it's broken its trend line quite cleanly there. Very little doubt about that. The commodity index, which I guess I'll never fix this in the data feed, is Charlotte Home Price Index. It's not. This is the Commodity Research Board Price Index. Lot softer here, mainly because of oil. I guess crude oil was down like over a full % today. The Gold Bugs Index is a huge favorite of mine right now. It's down over 1% today. We've got this nice abandoned baby pattern here. I was puzzled GDX didn't fall today. It was pretty strong actually, but I do think that between the euro and GDX, those are kind of my two favorite trades right now. Let's just skip a few here because, like I said, I don't have a heck of a lot to talk about tonight. Russell 2000, very much threatening another breakout here. 773 is the price level to watch here. And if you look at the IWM, you can see this a little bit more plainly because we're much, much closer to a breakout. I would put here at 76.68. Any kind of strength tomorrow at all would push it above that territory. And we again will face a situation of, put up or shut up. Do you run off and get into the 800s again on the Russell, or is that all? Are you out of gas at that point and things just kind of fall away from there? If the latter, that's especially bearish because this is the bulls' big opportunity to really just grab that baton and run with it. And the SPX, we were looking at that already. Never mind. See, things are so boring that they're all starting to blend together. The last thing I'll show you just is the bonds, because this has been really surprisingly strong. These used to have a really good correlation inversely to the market. It's not reflected here because we're into evening trading already, but today these were up quite strong, which is odd. And I think puts a little tally mark in the bearish column for equities because the bonds don't seem to be kind of buying it. In any case, if we can push above the high of December 30, I think that helps shore up things on the equity bear side. And certainly if we can get above 146.34, if we can bust above the December 19 highs at some point, that would be pretty spectacular. We've got to take it a day at a time at this point. We're still not in the thick of earnings season. I don't know if Alcoa has like the world's greatest accounting system or whatever. I don't know why they report like 1, 2, 3 weeks before everybody else. But it's the kinds of companies reporting right now are basically those that nobody's ever heard of. Next week it'll get a little more active, and the week after that things will really start rocking and rolling with big earnings reports. But anyway, I'm lightly committed now, like 40%, no big positions. I took profits on my FXE trade this morning, and I'm just really not feeling strongly in either direction right now. So a lot of ambivalence. See me shrug my shoulders, just don't know right now. That's it. Have a relaxing evening, and I'll see you Thursday morning.